In the last 500 years, the world has had three reserve currencies. Every single one of them eventually lost its throne. The Dutch guilder ruled for 200 years. Then the British pound took over. And in 1944, the US dollar became king. But here is what nobody wants to say out loud. Every reserve currency in history has eventually been replaced. The warning signs are everywhere right now. When Japan buys oil from Saudi Arabia, they do not pay in yen. Almost 90% of global currency transactions involve the US dollar. This gives America something economists call an exorbitant privilege. The United States can simply print dollars, and the rest of the world absorbs that cost. And right now, that advantage is shrinking. The U.S. national debt has crossed $39 trillion, growing by $6 billion every single day. Warning sign 1. The world is quietly dumping dollars. In 2001, 72% of all central bank reserves were held in U.S. dollars. That number is now 57.4%, the lowest level since 1994. 15 percentage points lost in just over 20 years. Warning sign 2. Central banks are hoarding gold at record levels. In 2022, they bought over 1,000 tons, the most in a single year since 1967. Then 1,000 tons in 2023. 1,000 tons again in 2024. 3 consecutive years above 1,000 tons. That has never happened before in modern history. Warning sign 3. Saudi Arabia let its 50-year petrodollar agreement quietly expire. For half a century, every barrel of oil on earth was priced and sold in US dollars. Now, Saudi Arabia is openly discussing selling oil in Chinese yuan and euros. The trade routes that made the dollar indispensable are quietly shifting direction. So what actually happens next? The most likely scenario is a multipolar world. The dollar stays important but shares power with the yuan, the euro, and new alternatives. The British pound did not collapse in a day. It took 30 years to lose its reserve status. But those 30 years completely changed who got rich and who got left behind. Here is what smart investors are doing right now. First, own assets, not cash. Stocks, real estate, and commodities hold their value when a currency weakens. Second, diversify internationally. If all your investments are in US dollars, a weaker dollar makes every single one of them worth less in global terms. Third, hold some gold. Just 5 to 10% in a gold ETF. Central banks around the world are doing exactly this right now. That is not a coincidence. The people who understand what is happening will be positioned to protect and grow their wealth through this transition. Subscribe. It might be the most valuable thing you do this week.